You got US dollars. You can't put any more money into crypto. Peter, you also can't put any more money into crypto.
Well, I don't have any money in crypto, so I guess.
What do you do with US dollars today, Raoul? No more crypto.
I'm actually long US dollars because I think the dollar's going up because I think the world is actually slowing down again. So I'm long US dollars and long some bonds. And those are the only two other trades I've got in the world. And I've also got some carbon futures in Europe. So those are the only three trades I've got. The carbon futures is a fantastic long-term story that it's driven by the incentive system within the EU to raise the price of carbon, and these futures are directly linked to that. And then I'm long dollars and long some bonds because I think the world slows down a bit, and the rest is pretty much 100% crypto.
Mooch?
Well, we're basically more or less out of the bond market. We're reducing our structured credit exposure because of the lack of interest rates in that area, and we're in growth stocks actually. So I don't own dollars the way Raoul owns them, but I own a lot of U.S. dollar denominated growth companies.
And are you not concerned that the market has repriced itself and we're seeing the markets at all-time highs today? Are you not concerned that
Ran, this is a really interesting point, right? Because everybody goes to this and says the markets are expensive and therefore there's risk. Play that through right now. If the markets fall 15%, what is the reaction function of central banks? It's currently to print more money. So in which case stocks go back up. We had the largest recession in all recorded history. It lasted 2 months because of the ridiculous amount of monetary printing. So now that both the governments and the central banks know that they have one trick that can basically, in their mind, stop a recession, they will use it all the time. So it's a weird world where buying puts used to be a profitable strategy when you got the timing right, but actually it's buying calls into that actually makes more money. You want to be on the long side and assume that the central bank owns the down 15% and lower put, and it's free for you. So it's kind of skewed how the world works. And I kind of agree with Mooch, is that in the end, growth stocks have proven over time that in lower interest rates and a kind of weird growth environment, they will outperform massively because they are also seeing network effects and the massive rise of technology.
And some of them have tiny amounts of yield, believe it or not.
Yeah, that underperformance, though, is going to end when the money printing that you're referring to unleashes much greater increases in prices for raw materials, consumer producer prices. So when we get into a very high inflationary environment, at least the way it's measured by the government indexes, then a lot of money is going to move out of those growth stocks into companies that actually earn money and pay dividends that can raise and somehow keep people above inflation. But what you're talking about when you own a lot of dollars because you think there's going to be problems, I mean, the reason people are buying dollars now is because they're anticipating this tightening cycle. But there isn't actually any tightening going on. All that's happening is the Fed talks about tapering. Maybe they'll taper a little bit, maybe they won't. What we know for sure is they're never going to get around to raising interest rates because long before they finish the taper, the market will tank, will be in recession, and the next round of stimulus is going to be bigger than what we had after COVID. I mean, the QE keeps getting bigger and bigger and bigger because the bubble is bigger, the addiction is bigger, and so eventually these dollar rallies are going to get smaller and smaller because the tightening cycles are smaller and smaller, and then the easing cycles are bigger.
Even if you're right, let's say you're right, and let's give you that scenario out for the next 6 months. You still have to be long equities in that scenario because if you go back in time and look at inflation creeping into the market, not hyperinflation, but what you're talking about is maybe the Fed even suggesting they'd start to tighten. You're not going to get competition from fixed income or the dollar in its liquid currency until the 10-year has a 3 handle in front of it.
Yeah, I do. I mean, I do own.
That's a very long time from now. And so in the meantime, you want to own stocks, even the index itself, because it tends to outperform even as you start to tighten. People think,
well, I want to look.
Correct.
I have a lot of equities. I want to just be selective. I want to buy stocks that I think have real value. Almost everything I'm buying is outside the United States because I perceive much greater risks and problems here in the United States. So I'm abroad. But yeah, I keep some cash and I keep some dollars because I do think that you could continue to see lower prices, and I'll buy more equities into any kind of decline.
For you. Do you ever own technology companies with network effects, or if those valuations, those growth valuations, kind of been out of your matrix of how you invest, so you stick to value investing.
No, I've owned tech stocks in the past. I mean, not in the recent past. I haven't been there. And I may look at them again one day if they really get cheap, if everybody starts, getting rid of them. But right now, the stocks that nobody is buying are the ones that I want. I mean, they're where you get the good value and the good dividends. And they kind of came into favor recently, but now a lot of the stocks that I own, they're the ones that are correcting because people are kind of reversing their bets on the inflation trade. People are now think, oh, there is no inflation because the Fed is going to stamp it out. The Fed is going to tighten, and inflation is transitory. It's not transitory; it's just getting started, and the Fed's not going to do anything but throw gasoline on the fire.
In Italian, he's gabados, Raul. You know what gabados means? He's got cement in his head.
I got brains in my head. You guys have bubbles in your head. That's the problem.
I want to just understand it. If guys like Ray Dalio say they don't like Bitcoin, they do the research, they buy Bitcoin. Guys like Mr. Wonderful say, hey, I don't like Bitcoin. They do the research, they buy Bitcoin. And I can give you a litany of other people. You probably don't think I'm intelligent, which is fine, but I did the research and I got myself long Bitcoin. What is it that all of these people are missing, Peter? What is it all
again?
They're missing?
I mean, there are other people, right? Warren Buffett, Nassim Taleb.
Hasn't done the work.
No. You just
work. Warren will not do the work.
No. You just
Munger will not do the work.
You just assume that somebody who's an intelligent, successful investor, if they're not investing in Bitcoin, it's because they didn't do the work. Maybe they did the work. Maybe they came to a different conclusion.
You've done the work. Make the Bitcoin case, because what Munger says is you got to be able to make the other side's case better than your own case. So make the Bitcoin case. If you've done the work, make the Bitcoin case.
No, I know what people say to buy Bitcoin. They say the same thing that I say about fiat money and inflation and central banks. And then they say buy Bitcoin because it's better than gold because there's only 21 million of them and it's more divisible and it's more scarce because there may be some gold on some asteroid that we can mine one day, and and there's no counterparty we can transact. I know all the stuff about Bitcoin, why it's supposedly so great, because I've been hearing it for a decade now.
Mr. Wonderful, Bitcoin or Ethereum? If I were to put a gun to your head and say, you got $100,000, you got to put it on one, you can't put it on both, you got a 3-year holding period, where do you put your money?
Bitcoin. It's the granddaddy. It's the institutional desire that most of the people I talk to, that whether they are speculating or not, want to establish compliance with their own groups at the institutional sovereign level with Bitcoin first. They're wrangling for 1% to 3%. I have this dialogue every day. They want to get through this whole ESG thing. We talked about that already. They want the compliance platform to market for their internal accounting and internal compliance and external mark to market when there's capital gains involved or not. Most of these guys, which I got to tell you is interesting, they're not considering it a currency. They're considering it a property. They're going to buy it, check the box on the ESG thing when they get a way to do it, which means they may have to mine their own, and then hold it in perpetuity just like they do, as Peter suggested, with gold. They have made that allocation. If they were 5% weighted in bullion, maybe they're paying storage, maybe they're using an EFT like GLD, whatever, but they want to own Bitcoin. So if you're putting my gun to my head, I would go long Bitcoin for the next 36 months. I think it'll beat the indices. I think you'll do better than 7 or 8% on it. Yes, it's going to be volatile, but I keep telling everybody, and I said it at Bitcoin 2021, when we solve it for them on compliance and ESG, Katie bar the doors, we're talking about $1 trillion worth of buying power. You want to see Bitcoin at 100,000? That's how it's going to happen.
Rich, Bitcoin or Ethereum, gun on your head.
I'll keep it brief. Bitcoin.
Tell us why.
Well, a lot of what Kevin just said, but more for me about the exponential growth of what Raoul's thinking. 140 million wallets right now, accelerating to 1 billion wallets. This is going to be Facebook. There'll be 2.8 billion users of Bitcoin on that network, and a result of which there'll be an explosive opportunity for returns.
Raoul, Bitcoin, Ethereum, or Cardano?
Without question, Ethereum. It's by far and away the network effects are growing faster and deeper than Bitcoin, in fact, twice the speed. So it's growing at a dramatic pace. There are more applications. We've talked about NFTs. We've talked about DeFi. It's all on top of Ethereum. Will that change after 3 years? Possibly. But the network effects, and that's how you value these things, is the number of nodes on the network, the growth of those nodes, and the interconnection of those nodes is growing so much faster than anything else. It's just going to outperform. That doesn't mean I don't like Bitcoin. I don't agree. I agree with the store of value, the pristine collateral. I've made all of these arguments. It's nothing to do with that. I just think Ethereum outperforms, and my money's actually mainly in Ethereum these days.
I must say I agree with you, because I think that Bitcoin is a store of value, and there's a big space for a store of value. Ethereum is a call option on multiple new industries that haven't yet started. So the first option that was triggered was one on NFTs. Yeah. The second option was one of what they call decentralized finance. And I think
don't you want my answer?
I'm coming to you.
I think we both own Ethereum in addition to Bitcoin.
Okay, Peter. So there's a gun to your head. You're not allowed to buy gold. The answer is you got to buy Bitcoin or Ethereum. You have to pick one, and you have to tell us why you pick the one you pick. You have to buy one. Which one do you buy?
Peter's going to buy the gun.
First of all, I might just take my chances on. I might just take my chances with the bullet. I mean, but look, I was gonna say, I was hoping all you guys were gonna go Bitcoin, so I could be the contrarian and go Ethereum. But it seems like it's split 50-50. I mean, I guess if I was gonna gamble, because it isn't I think you're wrong. Bitcoin is not a store of value, because in order to be a store of value, you first have to start with value, because you can't store something that you don't have. So they're both speculative tokens. And I guess to the extent that they both keep going up for the next few years, probably looking at the charts, Ethereum is going to beat Bitcoin. So if I had to buy as a speculative token, but I think if they go down, Ethereum's going to go down more, right? So if they crash, Ether will probably crash more too. You'd probably agree with that. But if they're going to go up, and I'm gonna buy it and hope, then I guess I would take that one.